Welcome to Pressure Points. Our topic is Meta earnings. And as of this recording, which is just over 30 minutes after the conference call ended, shares of Meta are up a little over 4%. They did kind of peak at up around 6% in after hours trading. So they've pulled back a little bit. We'll get to that in a minute here. But overall, this is a strong quarter and a really strong outlook, too. They raise their revenue guidance effectively by 3%. And typically they come in at the high end of the revenue range. So if you take that into consideration, they effectively raise revenue by 3%. And profitability is really nice. And so that is just at the highest level. But I'm going to jump into the pressure point. And Meta is, in my view, the best example of return on investment in AI at scale. And as someone who has been investing in AI and does a ton of research on it, there's been this nagging question over the past couple of years of give me an example of some way that AI is having a positive return on investment. And typically what comes up is related to customer service and separately on the coding side. But it feels still far short of what AI's potential is. And when I think about what happened with Meta's March results in the last couple of quarters, I think this is an example of a company that is having a clear benefit from AI, even though it's not because of an AI product. Yes, they have Meta AI, but it's got a lot of users, almost 1 billion users, but it's not the reason why it's driving the business today. And I really see it in two parts of how AI is impacting their business. First, on the engagement side. And engagement comes from having good content and separately good algorithms, good AI that does better targeting. And so the combination of using AI to create better, more content and separately using the targeting piece has yielded this rising growth within their daily users. And that number was 3.4 some billion. That's just over 60% of the world's daily online population. I mean, it's a huge number. It grew at 6% in the March quarter, was 5% in the December and September quarter. So you saw a small acceleration. But when you're talking about 3.4 billion, I mean, just to be growing is like remarkable. But to be accelerating by definition is even more impressive. And so I attribute that to how they're effectively making these products more addictive. I think it is a cautionary tale to all of us about we're so early in this and we're already seeing this kind of impact. Imagine what happens as these go forward. Another example of like how engagement can increase. I talked about the targeting, but they have these chat bots, and Meta AI is a chat bot, and that can increase. People want to come back and have conversations with Meta AI, for example. And so that's one piece to it. The second piece is that their margins are just keep going up. This quarter, their operating margin was 41%. The street was looking for just over 37%, but they didn't directly attribute this to. But if you look back at what Zuckerberg has talked about, their developers using more AI for coding and to kind of supercharge them, I've got to believe there's something that's within that equation that's having a positive impact on their profitability. And so the key takeaway here is Meta is having a clear benefit from AI. And in Zuckerberg's opening comments, he laid out that there are 5 areas that they want to continue to invest in around this. It is around engagement, content creation, Meta AI, business messaging, and lastly, the Reality Labs, the hardware piece. And that to me says we're going to see even more of this from Meta, even see more of this impact. So I want to, I guess, just call out they're making that meaningful progress. So that was the pressure point. I'm just going to jump through a couple other key takeaways. Is they did raise their Capex by the midpoint at 9%. And so that to me was like the most impactful point for the overall AI investment view for the next several quarters, the fact that they're increasing it. On the earnings call, CFO Susan Lee came back and tempered it a little bit and said that part of that is because they want to increase capacity, but also part is because they are expecting some of the costs to be increasing on the margin. other pieces related to the kind of, I guess, the substance of the call was related to that guidance piece. I mentioned that they raised revenue guidance by 3%. They did say that China, and specifically China gaming, and also some China e-commerce, and that would be like Temu, for example, they had a negative impact. They didn't call it the exact number, but you can translate to the number would have been a little bit better if not for what had happened in China. And so maybe they raised it by 4% instead of 3 or 5. But either way is that they're able to raise guidance. And going into this, I was fully expecting for the numbers to come in a little bit soft for the full year because this 10% impact on China. And here we are, they actually raised the numbers. So that was I think the two other key takeaways. The one final one just related to what's going on in Europe and some of the regulation. Susan Lee also mentioned that there could be some changes that they have to implement that could have a negative impact on revenue starting in Q3. And the stock kind of shrugged it off and went down like 0.5% on that. But that's something else just to kind of file away in the back of your mind. They're saying that that is something that is something that was noteworthy. So overall, great quarter. And I think you're going to continue to hear more good things from Meta when it comes to AI. On behalf of Pressure Points, I'm Gene. Bye for now.